you're in the right place. You just find out about Forex and you just want to understand what this thing is. Let's go straight to the candles. This is now the candlesticks. All right. The candlesticks, we have the buying candlesticks and the selling candlesticks, which is this one. Now, the difference between these two is the buying candlesticks, which is this buying candlestick, is for the buys when the market is pushing to the upside. When the market is pushing to the downside, that will be the selling candlesticks. So the difference is like the highway, okay? So we have cars going this way, which is up. We have cars going this way, which is a two-way road, okay? So each and every candlestick signifies something in the market. The reason why I'm asking you to concentrate more on your candlesticks, more than your system, because each and every candlestick is liquidity. Now, what is liquidity? Liquidity is money that is induced by investors in the market to have that large volume in the market. Without liquidity, without the money, there wouldn't be a market, basically. So what you need is to understand that every candlestick is money. All right, fantastic. Moving forward. Now, in these two candlesticks, we have the buying candlesticks, yes. So the buying candlesticks will always open low, which is right below the candle, okay? And will always close higher, all right? So that is where the term of buying low and selling high would be coming from, all right? Now, within this candlesticks, we have this small little thing here, which is what they call a wick. The reason why it's called a wick, because the market, before it produced this big candle, it started to open there, then it pushed, then it came down, then it decided, okay, I want to be right here. Then it pushed to the upside. Before it got to close here, it pushed all the way to the downside. When it decided to close, it came back and closed right here. Then it left that void over there, which is called a wick. Do you understand? Now, the importance is not about the terms. What's important is you understand, and you have an understanding what's a wick and what is a candlestick, okay? So don't concentrate too much on a wick, but concentrate more on the body of the candle for now, okay? So we're having that open there, and we're having the close. That is what the buying candle is. The selling candle, it's the opposite. Again, the market comes in twos. It will always have the selling side and the buying side. Only in twos, it always have the left and the right. There's nothing else. You move to the selling side the opposite way. So if the buying candle opens low, the selling candle will open where? High, right? Fantastic. And then it will close lower. All right. Why? Because people came in with the volume of liquidity. They put money into the candle. It came here, it opened there, it came all the way down, right? And then it was coming down as people were putting more money as they see the market coming down. It pushed to the downside. When it pushed to the downside, it closed right there. Remember the wick? Okay, so it pushed down aggressively with the money, and then it come and close right there. And then it closed right here, okay? So that's it. So what you need to take is the buying candle, it closes high, but it opens low, all right, because of the liquidity that is pushed all the way to the upside, because we need to push up because we're buying. When the stock market or when the Forex market is going up, it needs to go up, down, up, down, up, down, up, down. That is what they call a trend. So it's a buying trend because it's pushing to the upside. Now, when you come into the selling side, we're selling because it's down, up, down, up, down, up, pushing to the direction of the downside. That means we are pushing down, which is now a selling market because we're pushing down. Okay, so when you're hearing words like it's a crash, that means that we are crashing to the downside. So we can't crash going up. Okay, we're crashing only when you're going down. All right, but those are terms used more in stocks. Okay, but which really don't matter much, because in Forex, we buy and sell. It doesn't matter because we are only concentrating on the different price movement, and then we'll be focusing on where to enter for our buy or sell. So we're moving on now from the candlesticks. Okay, we're going to go straight to our We're going to go straight to our okay. So the foreign exchange is from the financial platform. The financial platform is where we have to sell and buy these different assets. We have different assets in the financial market, which can be your futures, your stocks, and the foreign exchange and bonds. We have different and plenty of assets in the financial space. So for you that have heard about Forex, the foreign exchange is different currencies. So we trade different currencies and different price points to make profits. Okay, so whether we are crashing or we are pushing to the upside, it does not matter. What we're focusing is the different price movement. Okay, that is what we are buying and selling, the price movements. All right, for an example, if you believe for an example, if you believe that from this price point, the price point is 18,304, that is the German 30, okay? So if you believe from 18,304 till 18,279, you believe that if the price comes from that area, you are wrong, and that what we call a stop loss. Okay, so from this price point to this price point, from 1836 to the 1827, you believe if the price reached that area, I am wrong, right? But for the German 30, if you believe that from this price point 1826 till 17,981, you believe that will be the trend going down. Therefore, that's what you will be selling. So we are selling and buying that price movement. Do you understand? That is the foreign exchange market. Now, I do understand that I am using an example of the German 30, but we will be focusing more on the GBP USD. So that would be much easier for you. But if it was for me, I would start trading indices from the get-go because it's better for you than the foreign exchange, which are the pairs. Now let's move on to the GBP USD. GBP USD. All right. Now in the foreign exchange market, we have only two pairs. Okay, the pairs only comes in two. That's why it's a pair. So you would have your GBP and your USD, or you would have the euro against the dollar. So it's one against the other. All right, so whenever you get confused as to how do I explain this thing, is one currency against the other. All right, so what your job is as a trader is to differentiate the price movement between these two currencies, and that is what you would trade. And then you will add your strategy into that. So before you get into the strategy, you have to understand that we have different time frames. All right. So the different time frames are for you to be able to enter or analyze the market. So what we mean when we say we are analyzing the price points. We are analyzing the price movement. Do you understand? That is what we're talking about here. Do not complicate it, because it's going to get you, listen, it's going to get you confused. You need to move with simplicity in this thing. If you find my way of explanation is hard, you can go to someone else who can make it more simpler and simpler for you. All right, now moving on. So when you have understood what is the foreign exchange, and we are using the financial platform to trade, and then you move into your time frame. Your time frame would be determined by your strategy. So in this strategy, we will be using two time frame. I have a reason for only using two time frame, not 6, not 4 time frame, not 8 time frame, not 11 time frame, not 5 time frame, because when you're starting off, you need a direction. All right, and the best way to find direction is to only use two time frame, is to bring down your time frame. Do not move quickly into a smaller time frame, because that is where you will take longer, because there is much noise in that smaller time frame, because there is more movement, more people. All right, understand? That's that. So when you're starting off as a beginner, you need to focus on only two time frame. In fact, you're supposed to focus on only one, because your job is to not look for entries. Your job is to understand the market, because that's what you need to do. So moving ahead, what I'm trying to say to you is we're focusing on two. All right, so the two would be our weekly time frame and the 4 hour. The weekly time frame means every single week there will be a new candle printed in the market. All right, that is why it will be easier for you to understand what you're doing, because you're only focusing on one candle. Do you get me? And then you move to the 4 hour. The 4 hour only prints for one candle. It only prints one candle every single 4 hour. That means on a day, you'll be sitting on at least 4 candles on a day, if I'm not making any mistake here. So how much easier would that be for you if you are just sitting on only 4 candles and you can only concentrate on those 4, and every week you're only concentrating on one candle, because your job is not to look for entries but to understand the system. That is why we are only looking at the candles. Let's move on. When you understand that, you come to the weekly time frame. Okay, so you must remember that foreign exchange comes in two pairs. Now we are focusing on GBP USD. The GBP USD is the Great Britain pound, the amazing heavy Great Britain pound that is very expensive and very hard to work for this country because everything is very expensive because of it's one of the best currencies in the whole world. It's actually the leading currency in the whole world against the dollar. All right. This does not mean because it's Great Britain pounds against the dollar, it means that the dollar is the second best, is the second best currency, but it means that it's the Great Britain pound against the dollar. So whatever happens to the Great Britain, it will affect the pound. Whatever happened in the United States, it affects the dollar. Do you understand? So we are looking at these two pairs. They are the pairs that are fighting against the other. Not necessarily fighting as in fighting with fist, but it means fighting with price movement. That's it. I think you get me at this point. Now, let's move on. So, we're on the weekly time frame. What are we looking for in the weekly time frame? Noli, you talked about the candlesticks, that the buying candlesticks, it opens lower and then it closes high. But what is that for me? What will that do for me when I have to implement that in the market? Okay, so what I'm trying to say here is that we are looking at a buying model. The buying model is the model that push price to the upside. There is no business for you to be looking at anything that will be going down on a buying model. If you're moving with us, when we buy, we are only looking at candles that are pushing us to the upside. Fantastic. So the buying model is the model that pushed the trend to the upside, right? Moving on. So here, right now, we are looking at the buying model, which is the upside. All right, which is the upside, just like that. And then we have the selling model, opposite, guys, it's the downside. Okay, so if someone comes to you and say, oh, the market looks like it's more on the selling side today, or the market looks like it's going down, or the trend is a selling trend. It's the same thing. We all using different words, but it's the same thing. Whether I'm coming to you saying I'm only a seller in the market because I'm thinking that the market is more on the selling side, I just mean that the market is pushing down. If someone says to you, oh, the market is on the buying side, it means that the market is pushing to the upside. What they mean is that they are looking at more buying opportunities. Okay, so now this is what you focus on. Okay, this is what we call a strategy. Now, a strategy is the system that you build for yourself. All right, does not necessarily mean from what someone else have taught you, because I can teach you this, but it's something that I've built for myself because it's a system. Okay, so a strategy is a system to be able to determine the price point, the price movement. See, everything connects to each other. Nothing goes on its own in the foreign exchange market. Do you get what I'm trying to say? Moving on. Fantastic. Now, what you're trying to do is you will go to what we call the beautiful left side, the famous left side, where everyone uses this left side, because this left side is where you would find what we call your tools. Okay, your tools is what you're going to use to analyze your price movements. Okay, so at this stage, we're only focusing on this tool, which is the trend line. Okay, the trend line tools, you just press a star there. okay? And we only use the arrow, okay? And we're only going to focus on this two tools. These tools is what will help you to determine your position. So when you believe that the price point between these two currencies will be sitting on a specific price level, you'll be using this to determine your stop loss and your take profit, which we will be moving forward for you to understand what's the stop loss and the take profit, and then the importance of that. Okay, so we only have those four to work on for now. Now, I spoke about the price movement. Where do I find the price movement into this thing? This thing is confusing. I'm seeing red and white candles. What is going on? Okay, now when we are looking at the left side, okay, on the left side, it's what you will find your price movement. I said, if you believe that from 1,34066 till 1,32302, the price movement is going to be a stop loss, then you will put that as a stop loss. If you believe from this 3.1553 till to 6348, the price movement will give you a selling point. You will sell that difference in between the price. Okay, that's why we always say, where is price? We don't mean where is price as in how much. We mean where is the candle sitting on now. Okay, so if the candle is sitting at this price point, that's what we mean. You say, okay, I think now the price is at 1.341. So 1.341 is 1 pound, comma 3 on the dollar. That's what it means, all right? It's a pound. It's at 1 pound against the dollar at that point, all right? So that's what it means. So now we are moving towards our direction, which is the buying direction. Okay, now here you are not looking at 160 things and confusing yourself, and you just want to beautify your charts. What we're looking for here is, how can we determine the price point? How can we make money from the difference in that price point? To understand, because what's important is the price movement. Okay, now you will take your tool, okay, you will take your tool. If you're seeing that push to the downside, okay, when I say push to the downside, I mean selling side, okay, it's the same thing. So you want to put your selling level into a recent low. You want to put your selling level to a recent low, okay? So at this point, before we were buying, we were selling. Remember, the price comes in two. So we were selling at some point, that was 2016, all right? This is a weekly time frame. And then now we want to see that beautiful push to the upside, because we've been selling for a long time. This is a weekly time frame, I repeat. Now, there's two things you are looking for here. You'll take this little thing, the rectangle, which you'll find it on the left side on the tools box. Take the box. If you find the market pushing like that, you just take the box, put it like that, on the lows, like that, okay? And then you would have, just cut that in half, because it's too much that week. All right, so on the weekly time frame, if you find a candle like that, prepare yourself to buy. Okay, I've made this example because it's easier for you. Okay, prepare yourself to buy. If the market on the weekly time frame have a strong week, if you listen carefully, you know what the week is. You need to prepare yourself to buy. When you have done that, all right, the reason why you have to cut it in half, because there was a push to the downside before this thing came and closed there. All right, so you want to cut it to this level, because this is the 50% that the market will have to come and tap and push to the upside. Okay, that's simple. When you're done that on the weekly time frame, okay, you're gonna have to find your arrow again. You find your arrow, and then you put it on the order block, okay, the order block, which is right here. Now, Nolly, what's an order block? The simple way to understand the order block, okay, is the last candle that pushed price to the downside. It's always going to be in a different color. It's better for you to use that. All right, so this is the last candle. Before we had the push to the downside, which is this selling side, we had that candle. So this is the candle you use. All right, that candle will help you to come out of the market, or to help you with the change of the direction of the market. Okay, so when we're pushing to the downside, there is because of that order block. The importance of the order block is that there was a time when banks came in there, left money in there to sponsor the whole movement to the downside. When they sponsored that, they have their positions in there. So when their positions are now still right there, so now when they now sponsored the whole movement to the upside, they need to close that and then sponsor the move to the upside again. All right, that's the reason it's important. That's the reason why when you see the market reacting to the last candle before it sponsored that, they're usually a very aggressive push because of this. We're moving together, I believe. Now, we found these things, we found that, we found this. Now what you want to see here is, now what should I do next? This is the weekly time frame. What else should I do? I understand if there's an aggressive candle like that, that has a strong wick like that, I am preparing to buy. But what am I buying? All I know is I have an order block and I cannot wait for the market to get there. But that means that it's a weekly time frame. I'm going to wait. Look at that. You're going to wait for almost 3 months. We can't, right? So within this area right here, okay, the market was excited. So within that area right there, there should be a reaction from the banks from that, because they want to close their orders from these candles. All right. I once said, if the market have left something so huge like that, that means that they will come back and close that, because there is money that was sitting there. Remember, liquidity is money, right? So there's liquidity too much in this candle, so they will come and close there. Okay. Now your concentration is, I'm just buying. I'm just buying the market. I don't care if it comes down. My point is, I'm only looking at the upside. The traffic is going up. I don't care about the left side when it's coming back down. It's not my business, okay? So now, when you're seeing that, what you only need to look at, you just need to see that nice wick, all right? When you're seeing this wick, all right, we are preparing ourselves to push to the upside, okay? So what you can do here, just do that. You're seeing this wick, okay? So what you want to do now is, all right, I went to the weekly time frame. So the market have pushed to the downside. That's great. It left a big wick. Now, if there is no big wick, that is not what I've taught you. So that is your own thing. So if you're going to move with what I'm teaching you, you have to use the wick. If the market have left you a big wick, it's just too obvious to know what the direction is, especially on the weekly time frame. So you cut that wick in half because this will help you to understand your stop loss, okay? Cut that wick in half because the reason for that is there is 50% there. So they might come there to tap their money. 50% is the half of their money they want to close, and then they push to the upside. And then you want to see from the same direction, from the same leg, you want to see an order block. So you put your marker there on the order block. That's how your chart should look like. This is for someone who has no clue. All right, this is what you should do, and this is how it should look like. When it looks like that, now you say, okay, I want to enter now. I understand I'm on the buying side on the weekly. All right, so where should I enter and what should I do? Straight to the 4 hour. Straight to the 4 hour. I did not make a mistake when I did not count 1 hour and 50 minutes on that. You don't need that. You do not need lower time frame to be profitable. Okay? If you are someone who is impatient, that's on you. But this is all how far I can go with the video. This is all I can teach you. That you're impatient or patient, it's up to you. All right. So we're just going to help those who want to understand what Forex is and how to get something out of it. All right. So what you can do here is two things. You can delete this. All right. Because this was that big wick. Remember, from the weekly. Remember, right? This was from that week. So we don't need that because this is just going to make our chart a bit ugly. So we are trying to make our chart to look pretty, all right? And then there, it would be our 50% there. Okay? That was from that big leg from the weekly that we don't need, okay? So when you get to the 4 hour, okay? When you get to the 4 hour, what you want to see here, you are looking for an entry, okay? You are looking for an entry. Nolly have mentioned two things here. She said, if the market is buying on the weekly time frame, when I get to the 4 hour, I am not confused. I am looking to sell on the 4 hour. That's what I'm looking for. I don't care about the rest. It's none of my business. What I'm looking for is to buy the market, okay? I'm not looking at the selling side. It's none of my business. What I need to see is those big wicks. When I'm seeing that wick, that means the market is preparing to push to the upside. That's it, point blank period, moving on, okay? So we are seeing here now on the 4 hour, look, it's the same thing on the weekly. You can see that if you're pushing all the way, that's the order block, okay? That's it, that's that. And then you can do this because you're trying to make your chart clean, okay? So as long as you understand this box was for the week, basically. So now again, the market have given you that wick again here. So what you're going to do is just do that. Okay. Okay. Now we are looking to buy. What's the reason for buying? The reason for buying is because on the weekly time frame, we had a push from the downside. It left this area. It left this area. And then now I'm using that half to show that if the market still wants to tap in there, that's fine. I understand the reason they want to do that. But now I want to buy for the week because I understand there is a week they left there, so I want to buy. Not only what am I buying? I'm buying the GBP USD, all right, and the difference of price movements there. So that's that. So we're moving back to the 4 hour. Hopefully now you get it and you are moving with me. All right, so now you're just going to zoom in your chart so that you see what to do and what's going on. Okay, so now two things. What am I looking for? Okay, I am looking for a recent high. A recent high. A high is just that level. It's level of liquidity, okay? A recent high, because this is where you're going to get out. All right, so you're looking at the week and the recent high. Okay, then this is where we are moving to the risk and the management of the money. There is risk management and there is profit management. Okay, so when you get to the risk management is to determine how much you're willing to risk. Okay, so you're going to understand I'm willing to risk $100 to make $100, or I'm willing to risk $200 to make $400. That is where people say it's 1:2. They just mean I'm risking 1 to make 2. I'm risking $100 to make $200. I'm risking $10 to make $20. Okay, it's the best way to risk so that you can make more, so that you can protect yourself again when you enter another trade. Okay, so that's just how it is. Okay, then you can use that ruler. The one that you get from the left is the tool, right? So you're going to enter, not blindly, because we understand we are buying on the weekly. All right, what you're waiting for is the 1 o'clock candle. For South Africans, that should be round about, I think it should be 5 o'clock in the evening, okay, or it should be round about 4, okay. I'm not going to show you the 9 o'clock candle because listen, I know everyone says there's a good movement there. It's where you can get to more entries, but now we're only using 2 time frames, all right? But as you move, you can add that for yourself. So I'm saying you concentrate on that 4 o'clock candle, okay? That is at 1, all right? You don't know what time is, it's going to show you here, all right? Remember the 4-hour prints the candle every 4 hours, all right? So if it was 9 o'clock in your country, you count 10, 11, 12, 1, all right? That's plus 4 hours, and that's it, all right? Then you move, all right? So you enter there. Okay, then that's that. All right, you're not gonna hold the price until it goes to that order block of the weekly, okay, because that's just gonna take you almost months and months, and you don't have that capital, okay. And I believe that you're gonna have to practice this for some time for you to even get to that point. Okay, so now we will have to wait for it to play around and see what it wants to do. Okay, so this could be your level, that is your 1:1, or we can be there as to 2%. Okay, and we'll see what price does. Now we're not looking at, you know, panicking and not understanding what we're doing, because the reason for that is you're trying to see what you've seen in the weekly, and that's it. Okay, the first take profit has been hit here, if you're seeing here now. All right, the recent high, because all you've used was this low. Okay, remember we just work with the wicks here. That's the reason I said study the candlesticks first before anything else. Okay, so your first price point have been hit here. So that was the price movement, the different price movement I'm saying we are trading here. So from here, I thought from here till there, I think the price would give me profits. From here till here, I believe if the price hits that level, I'm out. That's what Forex is. All right, that's what Forex is. There is no other explanation. It's just the different price movement. That's what we are trading. We're trading different price points. Okay, and that's that. Okay, now with that, you can let the price go to your 2%. I don't know what they want to do. You can let the price go. Remember, it's the 4 hours, so it's going to take some time. It's going to take a long time. It's going to take you almost 3 days or so. That's why most people end up learning to trade the lower time frames. But I'm saying, oh my God, that's very beautiful. But I'm saying to you, it's easier this way when you're starting off because you're not trying to make money, but you are trying to understand how the system works, to understand. So I'm trying to guide you for that. Now, as simple as that sounds, okay, that is your trade right there. Now, you could have said, okay, you know, you've seen it because now it was the weekly, we understand. But trust me, we can repeat this on without looking at it. We can still have the same results because what we want to know is how to trade. It's not how much we are losing, because we understand that between these price points we have to have a stop loss, all right, and we have to have a take profit. Now, a stop loss is the price point from that point, which is 1.21917 till 1,21236, and that's that. That's the stop loss. It's stop the loss. It is stop the loss. That's what it's called. You are stopping yourself from losing more. You cannot trade without a stop loss, because you don't know what price can do. You do not have control over this thing. This thing is set for young, small retail traders, which are traders like us who have small capital to fail, because it's algorithmic, okay? Which means that it is set a certain way, okay? It's almost like to serve those who have big capital and to kick out those who have small capital. That is why they introduce a stop to the loss to have control over your capital. That's why we call it a stop loss. We call it a take profit. We're saying take money. It's take money from this instrument that you are trading, because of that's how much the price point have given you. So you have to be disciplined to take it and to set it and to take it. You set it and you take it. So for an example, from here, the price point is 1,21917 till 1,23241. Clearly, I need my glasses. 232241. You are saying from there, I'm going to take what the market gives me, not your ego, not what your ego gives you, what the market gives me. The Forex is hard because we trade with our ego, we trade with no capital, but we expect big returns. All right, so you don't want to be in that cycle, because that's the cycle of doom, and you want to be far away from that. Your take profit has been set, your stop loss have been set. That's it. That's how it's done. You move back to the 1 weekly time frame. Okay. What am I saying here, Nolly? One candle. So when you were trading here from your entry was there, right? So on the 31st of October, right, 16, which is 2016, you get in there. It was 1 o'clock you get in there.
So you will just have to understand what's 1 o'clock at your time or 9 o'clock at your time. The market went on Tuesday, then it went on, it played around on Wednesday, then boom. On Wednesday morning at 5, the market gives you profit. That is only 2 days, all right? If you are working, you are chilled, you don't care, you've set your take profit, you set your stop loss, none of your business, you don't give a damn what happened, what does not happen. This is all you're working with, that's it. If you are not working and you're depending on this thing and you don't have enough capital, you're going to force this thing to move quicker, but you don't have the power, unfortunately. So what you need to do is to calm down and set your take profit, set your stop loss and get away from there, right? Now, it took you 2 days. That means the weekly candle, it's still going, because in a week we have 5 days. So that means 5 days, it's now Wednesday. That means that thing is still going. Because you've got your TP, which is take profit hit, you don't have to be trading because you've waited for 2 days, you are good. So let it play out, all right, so that it can reach Friday. Wednesday, Thursday, all right, that's it. Friday, Thursday. So you are letting it go. Do you understand? Because you already have made your money. Unless you're like, oh no, I want 3%, that's up to you. I'm just teaching 2%, okay? I have no business with what you want to do. I'm telling you how it's better. You understand? So if you want to expose yourself to more risk, that is up to you. I'm just giving you bread for you to understand how this thing goes. It's so simple, yet it's so hard because people want to make it so big and complicated, and they want to keep on trading and trading and trading, exposing themselves to more risk. So you just let it go because you only have 2 time frames to work with. All right, Friday. It's now Friday. The market have closed. It's Friday. It's Friday, 1 o'clock. The market have closed. That now means that candle, you see you're buying there, that you were buying the week, right? That whole candle, it's just one candle. So you only traded one candle. So whether you went to 4 hour and you wanted to hold it till this, or you wanted to hold it till that, it's totally up to you. But what I'm saying is you are not a busy trader. You are not looking as to what to do and how to do it, because all you work with is wicks. All you care about is liquidity. So liquidity is the money from that week. Liquidity is the money from that week. Then you wait for 1 o'clock your country time, and then you enter. And when you enter, you target 1 is to 2%. Let the market go to work, go to the gym, do whatever you want to do. Relax. Okay? The next week, you try again. Oh, that's such so boring way to trade. Why should I trade like that? I want to trade every day. Oh my God, I just want to risk more. Why can't I risk more? Okay, how much capital do you have? Yeah, I know you don't have that much capital, so relax. Use the higher time frame because you don't have capital. What you don't understand is how scalping was introduced and how small accounts was introduced was for the brokers to make money every day. Because now they don't have to be maintaining these accounts, you know, like maintenance of the accounts, because the swing traders are there for 4 days, 5 days. The market is fluctuating up and down. So they got tired. They said, you know what? How about we target people who don't understand how this thing works? And we tell them that you can put in as little as $10 and you can trade the 1 minute and the 5 minute. Guess what? They are making money from spreads like that. They are making money from you getting in and out because that's what they want you to do. They are making money from commissions. You don't understand. This thing is controlled. This thing, you have to think as far Don't just think like a normal trader. Think as about the broker as well, because going back to that, a broker is the middleman as well. The middleman who will help you to get in the market. So you can't trade yourself and be like, okay, I'm my own broker. You can't be your own broker. You have to ask someone and trust them with your money, your $50. Please don't do that. There's the money. I want you to place the trade for me, because I do not have the system to do that. All I have is this trading view, okay? Not deviating too much to what you're talking about. That's all you need to do. 2 time frames, okay? For now, until you understand how these things work. Now, okay, we understand that's the buying model, okay? We want to understand the selling model. It's the same thing, it's just the opposite. Okay? So what you want to do is to go back to the weekly time frame. We're looking for the selling model. The first thing, again, same concept, same principle. You look for the recent high, all right? So at this point, this is our high, all right? So if you look to your left, remember that the market comes into twos. So your left, if you don't know why we have that big wick, is because on the left side, we had that order block. Okay, move with me. So on the left side, you're looking for the order block, the left side, and then on the right side, that should be your mark right there. Okay, so the next thing for you to do is to look for that spike. Okay, so that spike of the order block void, that's the spike. We got the spike. So now what does that mean? That means that should move with me. That means that the market is preparing to shoot to the downside. That is why we're using only 2 time frames. When you get there, what you need is this level. So this box, remember, is to prepare for your stop loss, okay? So they will touch that 50% and push to the downside, all right? So it's just to prepare yourself. Then you move straight to the 4 hour. You know, you're not confused whether to buy or sell or what you need to do next, because you are already aware that the spike means that we need to push to the downside, okay? Same thing we did with the buying model, guys. It's the same concept. It's just that now we're pushing to the downside, okay? This is the area you're drawn for yourself to push to the downside from the order block of the weekly time frame, okay? So now if you're looking into this is the reason why we're pushing down. Just that one simple candle have sponsored this whole thing. All right, so now what you left for you to do is to look for your recent low. Fantastic. So where is a recent low? All right, so we have one here. So there's money there. So there are people that ordered the price to come to the upside, or they push the price to the upside. And we have this level as well for us to look at price going down. For us to look at price going to the downside, okay? Why did you draw these? At this point, you should know it's because it's area of liquidity, therefore the price will come there, then go straight to the downside. So it's like the price targets areas that have been used before. So the algorithm, it targets areas that people used before to place their stop loss. Okay, so now moving on, we need to enter. So entry is where you enter for your sell. So you place your sell right there, okay, and we'll be targeting those nice areas there. Okay, 2%, 1% is right below, and 2% is right over there. Okay, right. So now you're not going in blindly. There's two things that could happen here. Price could come in here and push to the upside, and take you out. It is possible, all right? We lose in Forex, okay? Or price could come straight down to your take profit, okay? What's important is you have stopped the loss and you have take the profit set already. So you're not stressed about what the market will do because it's not under your control. That's fantastic. Okay, so this low is our first low to see what price wants to do, and then we'll push to the downside. Look at how I don't have a lot of things going on in the chart. Just look at the chart. Zoom in it for you. Look at what's going on here. I have this area, this is my target. This area, that's the target, because these are areas of liquidity. We have that area, that's the reason we're selling, is because of the that's the reason why we're selling. That's the reason why we're selling. It's because of this level. Because of that order block void from the previous order block. Okay, that's it. So you go to the 4 hour, it's the same thing. Just now it would be more wider because of there's more candles every 4 hour, all right? So now we're going to enter now and prepare for ourselves to go to the downside, or we can first go up, okay? We don't care because we've set our take profit and our stop loss. That's all we care about at this point. The rest is none of our business and it's not in our control. Therefore, we just need to do what we have control over. Okay, so you let that thing go and see what it wants to do. Okay, so if you can see here, price did come to this area. Why? Price came to that area because that's the area where there was money before. So it came first and took out those who bought this move, and then it came to the downside. Do you see how simple that is without having to write fair value gaps, order blocks, without having to do all of that? What you need to study is the 1 week, and you need to study the 4 hour. When you understand the reason as to why we're pushing down the whole week, you don't have to change your bias because you understand for the whole week. The reason why we're pushing to the downside is because of that one candle of the order block void, which you can call it a spike, all right? Back in the days, people used to call that candle a hammer. The reason because of that is this candle, beautiful candle right here, before. So when price was pushing to the upside, it stops price from pushing to the upside. So definitely it shows you that the price wants to go down. This shows you. So this is what you're trading. That's it. And that's it. It's as simple as that, guys. It does not need to be complicated. You don't have to think twice. You don't have to doubt yourself. What you have to do is to just follow the system. The problem is you want something that is not there. So I'm telling you, the only way to get this thing right is to practice and give yourself 90 days. If this is the first time you ever heard of Forex and this is the first video you come in contact with, give yourself 90 days to practice the market. Then after that, you move to the areas. After that, you move to back testing. That's another 6 months. And then you give yourself 3 months to forward test. Okay, forward testing means you're going to do this. You place your order like that, but you let the market do its thing. So you're not going in live. You're not putting any money. All right. While you're learning your 90 days, while you're trying to understand this thing, while you are giving yourself a plan as to how much time you're putting into education, I believe you need to look for a job so that you save enough money to be able to buy a funding account. Funding account are companies that are funding traders that can trade, and then they give you leverage. So if you buy a funding account for $100, you have almost leverage of $1,000. Okay. Then you can trade that and make profits and grow from there and there until you make your first $10,000. It is possible. It is done. Hundreds and thousands of people have done it. But you need to give yourself time to learn the system first. Okay, so this is it. That is the selling model. You do not care about what happens here, where they push to the upside and they push to the downside. It's none of your business. What you care about is the weekly time frame have shown you that price wants to push down. Now, for the whole week, you should be looking at more of sells because of one candle have showed you that we're pushing down. Now, wouldn't you want to have something that is more solid like that? You don't have to now go to the lower time frames and look for what needs to be done and what you have to wait for, and then you have to wait for the fair value gap, and then from the fair value gap you have to go to the 5 minutes to check if it taps the order block. You're doing a lot. Okay, now when you're starting off, if you understand this and cut down things that you think won't be relevant for you, but this should be your sauce. This should be your sauce. All right, and then you take it from there. Okay, and that's it. Now let's move on to understanding a little bit of trading psychology. I already have so many videos on this, so you just need to give yourself time to understand what trading psychology is based on what these videos have. Okay, let's move on to the trading psychology. Now, we're not going to dwell too much on the trading psychology because, as I said, the videos have so much psychology in them. All right, that is what I'm about. I'm all about the psychology. But what I want you to understand, when you're new into the Forex market, what you need to focus on is discipline and patience. So for you that is still starting off, you have to be disciplined in your education. So if you tell yourself that today I'm going to wake up and learn the chats, that's what you're going to do. All right, so you learn discipline early. Okay, now Forex, to understand Forex, the most important thing in the Forex market is capital. So you want to find a way for yourself to get the capital. If you don't have capital, that is how you get trapped in this business. Small capital means small gains. Bigger the capital, the bigger gains. All right, bigger the capital, less stress. Bigger the capital, less risk. You understand? The smaller the capital, the more the risk. So what you need is capital. So you're going to be the one responsible to go out there and find capital for yourself. Okay, if you're going to have to wash cars, if you're going to have to get a job, if you're going to have to do something, I don't know, work in a children's daycare or something, work in a retail store, you have to get a job while you're learning how to trade. What I'm showing you it's not going to make you money, because you're going to stress the hell out of yourself because you don't have the capital, and you have to follow your rules. Okay, so what we're working with here is the trading discipline. The trading discipline is the STEM patience. Patience comes from having a good plan. The good plan is understanding that you don't trade anything more than a certain percentage. I already told about the percentages, and I already told how much you need to risk. And then from there, you move to your time frame. The time frame is only concentrating on 2. That is your trading plan. All right. So you're patient with your trading plan. That's what it means. All right. So when you move from that, you're going to move to understanding that you're never going to be right in this thing all the time. Never. You'll never be right in this thing all the time. Even when the strategy looks like it's the holy grail, it is not. Okay, each and every strategy has its losses, because the thing is, we have not that much capital to control the market. It's controlled by big people with big money, which is like your JP Morgan, Dutch banks. all right, big banks, and you don't have that capital to control anything. So you follow your trading plan and have a little bit of capital, which could be your 10,000 rands or 5,000 rands to start trading. Now, moving on, remember that you need to practice for 90 days straight and give 6 months of trading back testing, which you can use Trade Casa. Trade Casa is free for new traders. It does have a lot of adverts, but it does not matter. When you're hungry, you're not caring about the adverts. Just focus on the trading back testing. All right, so your back testing means that it's the information that you'll be collecting is data from way back, data from 2016, 2014. What did the market do? Did it follow your strategy that you are using now until today? So you need to have enough data. Enough data will help you with your confidence when you are ready to place your trade. Okay, when you have that 10,000 rands into your bank account, when you are ready to place your first trade, the confidence is coming from the data that you've collected over the years in the markets. Do you understand? So everything takes steps. Okay, so there's different stages and you have to follow all of them. 90 days of practice, 6 months of back testing, 6 months of forward testing. You can jump it and do it your own way because you feel like your IQ is very high and you can do this your way. That is fine. But what I've said, it's 6 months to everything. So that means that this whole thing can take you a year and a half for you to understand it. And then it will give you enough time, then have enough time to work and grow capital to put in a funding account. If you want to go capital live with your capital and you don't want to use funding accounts, that's fine. But at least start with a reasonable amount. Do not start with $10 because it will make you an impatient trader. $10 is not enough for anything. It's not enough. All right. So that's what this video is for people who want to do this thing the right way. Okay. Thank you so much for watching. See you again on the channel and practice. Cheers.